If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat. You can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. Hey everybody, good morning. Happy Wednesday. Interesting morning. We just started off like really rough, big gap lower. I think that was a reaction to the negative GDP number that came in this morning. And then we had core PCE and PCE at 10 a.m., which may show some signs of improvement. So we're kind of at a stalemate, trading between a couple of gaps. So I am monitoring some levels closely. Let me see here. Let's go session. All right, so let's see what this looks like. It's a little noisy. All right, I'm looking to see if we will get a bounce off of this session VWAP this morning. So if we pull back to VWAP and then go lower, I'm just going to keep an eye on price action for the morning. So here we have the day. I had a quick win this morning on SPX. As soon as the market opened, I sold a broken wing butterfly for 80 cents, took that down to 40 cents. It was a quick 50% winner. Price has actually pulled back right to center, which is not a bad thing. So typical sell side does work out pretty nicely. And we're lower. News-wise, like I said, here's what happened today. So ADP numbers came in really, really weak. Forecasted 114 came in 62, revision from 155 down to 147. I don't look a lot into ADP non-farm. It's mostly important on Friday when we have the actual non-farm numbers. But the GDP numbers came in negative. So 2.3 revised up to 2.4. Forecasted GDP for the quarter was 0.2%, came in negative 0.3. I'm not sure if that's what was the immediate spark for the market. But if you look at the futures feed here, that 15-minute candle is the 8:30 candle. So clearly there's a reaction right there from the future side where this market dropped on the open to close. The candle was down about 0.65%. Right. So fast forward, 2 hour or hour and a half later, you have your core PCE that came in, and this should be refreshed. I don't know why this not there. We go. So core PCE month over month came in zeros. I've got a better look at it from Bloomberg. Here's what we have for the 8:30 news. Right here. This is the chunk I'm looking at, or I'm sorry, the 10 o'clock news. So at 10 o'clock, core PCE month over month revised higher and then came in zero with a forecast of 0.1. So you could see that as a potential positive sign as far as inflation numbers go. Core PCE year over year was a revision higher, but a forecasted 2.6 that came in 2.6. Now the revision's not great. I think it went from a 2.8 to a 3%. Yep, 2.8 to 3%, so revised higher, but that's a 0.4% improvement for this forecast, and it did come in 2.6. I still think the market would see that as a potential positive sign that we're trending the right direction. Go to PCE. We had a previous print of 2.5 revised up to 2.7. Forecasted 2.2 came in 2.3. I'm just going to say this is a mix. It's obviously an improvement from the previous, but revised higher and just missed forecast by 0.1%. And then price index here, the month over month, forecast is zero, came in zero, and then the revision was higher. I'm going to say that's a negative. So I'll say this is a neutral. I mean, take this back here. So we'll go neutral and then a negative. So, I mean, the market is responding a little bit. Like we kind of stopped the bleeding immediately. Market's kind of back up where we started. So we're around opening price. So open up, there's a 5-minute candle and we're right back to it. So that would have been pretty simple for my typical, sell side SPX. But what I said I'd be watching here is perhaps we are coming right back into this session VWAP and do we hit this and reject off of it? So if I see a red candle, from here, I might take a stab at that and see if we go back and revisit the session lows. We do have this is a 2 and 3 multiplier for the VWAP. So perhaps we do get to one of those, but I'm not sure. It could be just a noisy day. I have a pending order to do a broke wing butterfly up here. So I haven't been filled yet because I'm trying to get filled at a price I'm happy with, and that would be a sell call around 55.75. So it's a 55.70 -2, and then a 55.70 would be my +1, and then another broken wing, which I just skip a couple of strikes, and I go 55.90. So I'm trying to get filled on this trade for $1. And in order for me to get filled, price is going to have to come back into this gap and fill me. But for me to take this trade, it's like $1 fills not bad. If price, taps this gap and then falls, then this dollar becomes 80, 70, 60, 50 cents for a partial winner. If I let it go all day, I can let it expire for the full dollar. But anyway, I think it's just, I don't want to be overreactive. I had a ton of trades yesterday for profit. I closed out, I think my trade counter yesterday was up to about 130 trades. I did a lot of pruning. So trades that I've taken off for profit so far this week, took a winner on IBIT. And this is like for the entire portfolio. So IBIT was a winner. Google had multiple winners. I had Google with, it was a ratio spread. SPY, I had multiple winners. AXP had multiple winners. Tesla had a winner. Apple had multiple winners, and I rolled a call. Snap, I took off a synthetic trade, so I took a winner on Snap. SMH took a winner there. NVIDIA had a bunch of winners. I had ratio spread, naked puts, and bull put spreads all took profit. So NVIDIA was up like almost, I don't even know, like I think 10 accounts, almost like $6,000 yesterday on NVIDIA. Palantir took profit on Palantir yesterday as well. So all in all, good profits, protecting, raising capital. I've got now over 50% of my account, 50% of my portfolio is cash. So I'm just kind of ready for the next kind of good looking opportunity. And I'm not exactly sure what that's going to be or where that's going to be, but that is the plan. So a lot of updated trades yesterday. So far today, prices, reacting aggressively on the 8:30 news, kind of stabilizing off the 10 o'clock news, and we'll see if there's any additional flows directionally for the day. Yes, no, maybe so. Okay, so we'll see. Let's go into some top down. I'm going to watch this. I want to keep an eye on this futures feed. I'm going to pull this over to my other screen so I can spot check that as we're talking through today's session. I might take a futures trade if I see rejection off that VWAP. God, it's just so much noise on my chart. It really is frustrating. It's like I don't like having crazy noisy charts, but I know some of you look at my charts and you're like, you got a ton of stuff on there already, which I do. Okay. Let's see if price behaves off that VWAP. All right. Couple things. So with the market being down, my first reaction was look at TLT. TLT is lower today, and we're starting to see US 10-year indecisive. I'm kind of counting the days, like day to day. Are we going to see the US 10-year get back down to Liberation Day announcement? Yes, no, maybe so. I hope this is the case for the sake of my 27 day to closing now for my home. But I've got to lock in around 6.6 right now, just in case this thing spikes up and doesn't cooperate. But I can also do another lock within 20 days or 15 days. So if it improves, then I will try to grab another 0.1% improvement, maybe more. We'll see. But let's go top down. So we're still kind of hanging in there. This is a bit of a no man's land. Look at some gaps. It's pretty easy to see we've got a lot of potential direction. Gap fill right here. Let me change this color. So are we going to see the bulls fill this gap up here? Are we going to see the bears fill this gap or this gap? I don't know. I mean, price is going to flow some way, shape, or form. I think as long as we kind of shrug off today's gap, then that's probably a good thing. I think that's a great sign if we shrug off today's gap. That means that even with negative GDP, the market, kind of instantly reacted to it. But if we have price action suggests that, well, maybe it's not as bad because it was a front run move with companies, with the tariff talk. Yes, no, maybe. I don't know. It's just there's so many levels where we have to watch for it. This is back to the question of where's resistance at. I still think if this market's going to find a way to go higher, going higher is still going to run into a lot of resistance, right? Swing to symmetry, a lot of resistance. I don't think this is a full on, bull market. I think that would be to me, I'd be the most surprised if this market revisits all time highs and this is a cup and handle measurement. I'd be the most surprised. I wouldn't be surprised if we keep like grinding up here, melting higher, and it becomes kind of a choppy, indecisive zone. Kind of back in here. This is an overreaction. Market comes back and stabilizes. And then honestly, the analysis is like, well, this looks like a bullish pattern. So there's a breakout. This could also be a false rally, and this is a rally within a bear market context that sells off. And that's a tough spot to be because how do you position for that? Enjoy the melt up if you get it, and also be willing to hedge to the downside if you get it. That's the reality, you know. So I would be probably just sitting and waiting for better confirmations. I mean, I think this whole year is going to be volatility, trade small, don't take on a bunch of crazy risk, and wait for good opportunities. And if you don't see something solid, I'm not going to take a trade. Like I'm going to be pretty patient. I have to be patient. Um, and it, like I said, the surprise is if we go higher, great. I do wonder what happens like today if we get the sentiment print. So if you go to your Edge Finder, go to your sentiment print. We've had 9 weeks in a row that have printed over 50% bearish, and that's the worst reading we've ever seen as far as like consistently bearish. So I do think that's why this market has continued to climb the wall of worry. Here's your investor sentiment report. We should have 9 prints in a row. 1, 2, 3, 4, 5, 6, 7, 8, 9 in a row over 50. It's going to print again. I think after today, it'll be another print. So we should be able to see this on the Edge Finder tomorrow. Do we get 10 prints in a row greater than 50? Right? Do we get 10 prints greater than 50? Or is the sentiment shifting a little bit? Because since the bottom on April 7th, the market's up like 15%. Like, is that enough to get this back to a bit more of a neutral setting? Maybe. Like less. I mean, the historical average on the bear side is like 31 or 32%. Historical average, 31% bearish versus 37.5 bullish. That's historical average. We're way off of that, right? So curious how that all plays out. But that'll print, I think, today, and we'll see this hopefully updated tomorrow on the Edge Finder. All right. So kind of no man's land for today. I've got a blue, or I've got a green line up here for that gap fill to the upside. So if I zoom out, there's that bullish gap fill. Then I have a red line for this bearish gap fill. Price right now, we do have MAG7 today after market. We do have MAG7 tomorrow after market. We do have non-farm on Friday. This is the end of the month. I mean, we could just kind of wrap up this month with, well, a little bit of excitement. Price is going to be relatively calm. We still have MAG7 earnings for the day. Like perhaps the market's still going to wait to see where MAG7 can take it. But tape-wise, we're down. I mean, that gap is pretty much why we're down for the entire day. Right. So like I said, I'd be surprised if we get to the highs before we retest some, either a higher low or we could retest the lows entirely. I don't want to be too bullish. I don't want to be too bearish. I think it's just a time to trade and survive and grind, and don't force a bunch of trades. I was fortunate in this area that, having the cash and the courage to buy things and sell premium, it paid out very, very well, which has allowed me to maintain, positive year to dates. I've got some of my accounts now, they're up into double digits. I have one account that's pushing almost 15% for the year. Considering from the recent highs, we're still down about 9 to 10%. I'm very happy with that. And I'm just going to continue to grind. Nasdaq, here's the Qs or the NDX. Same thing on some measurements. We could still see MAG7 push higher because we just have steady earnings. Do we push up and fill this gap? Do we push up and hit this resistance around the 200 moving average? Like, sure, all the above. We are also on the right-hand side of the trend line. So right now the bears are, today's gap kind of makes it a little bit more confusing, but the bears are not just running to the downside right now, and that should be seen as kind of a good thing. But I would be very cautious that any additional highs here could be met with a pretty swift rejection, right? And realistically, let's just think about, sometimes when you trade the markets, think about what's the hardest trade right now. Like, what's the most confusing spot that the market would be at right now? To me, the most confusing spot is going to be right here. If we pull back to this level, why would that be confusing? Because for a second, you're going to see this price up above the 200 moving average, which is going to be interpreted as like, oh, we're back above the 200 moving average. Well, that's a good sign, right? Sure, we're potentially forming a bull pattern here, right? But if we pull back, okay, well, there's a correction. The question with that is, are we going to see this as a right shoulder that is going to offer up the slingshot higher? Or is this, and this is where the head and shoulders is important to know the technicals, if it gets to this high, the textbook way to trade a head and shoulders is unfortunately not the right shoulder. It's actually the break of the neckline. And if this neckline doesn't break, you're not going to see the momentum. So if we start to turn here, right around this 200 moving average, right above that 200 moving average, if we turn here, this would have, I think, in the near term, a really good reward to risk opportunity that could also be worse, right? So, as far as reward to risk, this could be a really good trade. You could at least take this down if we get a rejection here. You could take this down to, maybe this 19.2 level. So you get a little rejection here with some favorable reward to risk. That looks pretty good. And if it gets worse and we come back and fill this gap or come back and revisit these lows, then some type of trailing stop loss could work out really nicely as well, because the textbook pattern, if it is a bullish head and shoulders, it'd have to break the neckline. So that could be a failed play. Make sense? So I think the trickiest spot for the market right now is we don't have anything that's really going to disrupt this melt up. And this melt up comes up into the 200 moving average. And then we start to wait. I would say be very patient for confirmation. But between this 200 moving average and this recent high right here from that pullback in March, that area would be, I'm looking for confirmation. I think I'm going to take a stab at maybe a hedge trade. I might look at some bear put spreads. I'll do something where the asymmetry is favorable. If I'm wrong, I'll make those trades are small. I'd like to take a trade that if it offers up a let's say a 3-to-1 or better, I'll take the trade. If I lose on that trade, it's okay because the rest of the portfolio carries the slack. Make sense? But that's a tricky spot for the markets to be at. Okay, Dow. UNH is probably what really hurt the Dow the most. This has room to still potentially get to the April 9th highs right here, and still has room to potentially pull back into this gap and this 200 moving average. So again, kind of similar outlook. Do we have heavy resistance here, heavy resistance here? We are seeing higher lows right now. If this market just kind of grinds, if resistance holds, you can see like a rollover here. We could revisit those lows. So I think this could be a challenging time where it's like there's not a lot of direction. So just want to be mindful of that. Russell IWM trading at 192. I think I've got my covered calls that are probably looking pretty good right now. IWM. They're still down. What the heck, dude? This is out to June. I guess there's still some time in these trades. I've got these covered calls at 200. which is fine. If they get called away, I mean, I pulled in $3 on each one, so it's $1,200. I did do a couple rolls yesterday. I rolled out Coca-Cola. So 100 shares of Coca-Cola. I rolled out to the end of the year into actually January 2026. This is a defensive play. I rolled it out for some income. I pulled in uh, the roll paid me. I'm trying to think what I pulled in like $1.50, which for Coca-Cola that's a pretty good covered call. Granted, I went out, a lot of time. I'm out another 260 days in this trade, but to increase my bottom line, 1, 2, 3, 4, 5, 6. So 600 shares at $1.50. I mean, that's another $900 improvement in Coca-Cola for a trade that I don't think is going to have much volatility to it outside of if it stays at 72, great. If we have a dip, that's fine. But I'm willing to have that and own that in the portfolio. MO, December, and pulled in some more income. This should be another $3,000 in MO. So a couple of rolls. NVIDIA, I cleaned up a lot of trades in NVIDIA. I have some shares. I need to add in a new collar trade right now. So I want to take a look at that. My break even on NVIDIA. Let's go to this. So NVIDIA, I'm looking for my collar position. Took profit there. Let me find this one. Fudge. All right, it's got to keep searching. So looking for my break even. So willing to own. Those are all, there we go. Okay. So my break even on NVIDIA is around 120. And I'm going to set in another collar trade on this one. I've got naked puts on this as well. I'm going to let this percentage increase. I'm only up about 17.5% on a put that by December, if NVIDIA is above $70, I'm making $350, about $1,400. But on these shares that I have, 1, 2, 3, 4, 500 shares, break even's around 120. Let me see what a play looks like here. So if I go NVIDIA, I have the put. I'll keep that put. I'm going to put a collar trade on. Let's go. We've got earnings on NVIDIA. Maybe just through earnings instead of a pre-earnings play, maybe right through it. So 30 days out. Break even, I can still get on the call side. Still get a couple of dollars at like a 120 call. Maybe try to go a little bit higher than that, like a 125. I mean, 120 is I'll lower the price aggressively. Let me see if I can finance this. So NVIDIA has gone as low as 87. And I'd say there's a lot of resistance around this, like 122 to 120. Yeah, I mean, 122 to 125 is pretty heavy resistance. There's a lot of chop back in here, maybe a point around 125 to 130 if we're lucky on the upside. We'll see. But, if this revisits lows, I could put in, a floor on NVIDIA, and we're just going to wait for this kind of bottom out and see if this can squeeze back up. So I think a 120 would be aggressive. 125 would be allow me to grab a little bit more profit, but less on the collar trade. But I think the downside protection would be probably the most important in case this thing does not do well. Let me see. So if I put in a 125 call, and against that, that's 139. I'd have to do like an 85 here. So I could put on a collar trade for 48 cents. This is right around earnings. This actually I might want to go out farther than that, just in case. I think I got to go farther. Because if I play this just on earnings, I'm not going to have enough time to really see that put pay me if I need it. So I'm going to go out. Let me double that up. So from 51, I'll go out 80 days to July. All right, NVIDIA, July. This is a little bit better. I can do like the 125, 130. 125 is not bad. That gives me basically an improvement of $8.55 because I'd go up $5 for my break even plus pull in $3.55 credit. That's not a bad spot to get it called away. 130 would be a $10 improvement from break even plus 260. That's a good win. I just don't know if we're going to get back above 130. So let me do a 125 and then see if I can finance this. So the 80, I can pull in $2 improvement, which lowers my cost basis to like 118. And if it gets called away, it gets called away at 125 minus. So 118 break even minus 125, get it called away for 500 shares and make $3,500 on Nvidia for a little flipperoo. If I want to go up a little bit higher, I can still get a dollar credit. Get this one called away for almost $1,100 times 5 minutes. That's a much bigger profit chunk. So I'll do this. I'll finance this with about $1. If I can get $1 here, maybe it's just right at the ask price or the bid price. Let me see what I can get. So this account has 100 shares. Let me put on a collar trade. Let's try to get $1. So $1's not filling. Let's try 97. 97 cents got filled on the collar. All right, I'm going to add this in. So adding a collar trade. The most important thing on that collar trade is tracking the debit. That's an $80 debit for $1.66. So it's a July 18 expiration. I'm selling the 130 call. And I'm buying the 80 put. That 80 put debit is about $1.66 debit. Because that's what I want to track as far as lowering my cost basis. If that $1.66 becomes $3.20, $4.80 over $5 if Nvidia really drops, especially through earnings or before earnings or even at earnings, I want to close it out to lower my cost basis. So break even price. Minus 97 cents. So at 119.61 is my break even. Okay. So that is the July 17th or July 18th, 130 by 80. All right, I'm going to get these in real quick. So this account, go to July, sell the 130, buy the 80, get filled hopefully for try 97. I don't think I'm going to get filled there, but we're going to find out. 97 not filling. Let's go 96. Got filled at 96. Okay, fine. This account, same thing. Sell the 130. Buy the 80. Try to get filled at 97, 98 cents maybe. 98 not filling. 97, that's the mid. Come on. 96. Filled. This account, no shares. That's fine. This account, this has it. So that's 9072. Sell that. Buy that. 96. 9072. Come on, you turds. Is the video up or down a little bit? I'm trying to think why these fills are 5 cent different. So I'm playing around with like little penny discrepancies, but come on, man. That's like 6 cents different. Filled at 90 cents. Ugh, that was not fun. Try this one, sell the 130. So my debit side is going up a little bit, which is why this is chewing into this trade. So I'm going to go try to get 93, 1608, 94 cents got filled on that one. No shares of Nvidia. No shares of Nvidia. I think that might be it. No shares of Nvidia. no shares, no shares, and no shares. Okay, so that should cover everything for me. So now my NVIDIA, 1, 2, 3, 4, 500 shares. I have 1, 2, 3, 4, 5 protected puts, 1, 2, 3, 4, 5 calls. There's my collar trade. So organize that in the platform. All filled between 90 cents is my worst fill, but 94, 96, 97. So I'll take off 90 cents. So collar trade. I'll put 90 cents credit so I can track the lower of the two. And that will be a break even of 120.58 minus 90. So 119.68. All right, break even there. Okay, that's NVIDIA. Let's keep going. Oracle, I actually might take, and this is going to be kind of annoying, I might take an assignment on Oracle. A 155 by 150 ratio spread. The break even is going to be, trying to think here. I think this account might have it. So it took in $1.31. This is out to May 16th, so still a few more weeks away. But a 150 assignment minus 5 minus $1.31. I'd own shares of Oracle at 143.69. 143.69 is, I'm just going to try to be aggressive on selling calls. This is going to be a repair trade, not necessarily looking to be crazy, profitable. It's like just repair it. So I've got the capital for it. We've got lows here around 120. Try to chip away, lower the cost basis aggressively. If I can lower the cost basis enough, so if I got a break even around low 140s, and I can lower the cost basis down here, down here, down here, then I might not be as aggressive on covered calls. If prices bottoming, I think we could go back up and I could, achieve some profit there. But I'm just going to try to repair it. Okay, so I'll keep an eye on that one for an assignment. That's still a couple weeks out. Let's keep going through. We did our indexes. Bond volatility is up a little bit today. VIX is up a little bit today. It's starting to fade slightly. Dollar index, let's have a look here. Dollar index on the daily chart still pretty sideways. It's like the dollar hasn't decided whether or not it's ready to pull back yet, or it's still going to get hit lower. It's okay, like staying out of dollar crosses. Currency strength on the day. And by the way, I think I've got a hard stop today at 11:30. Let's do this. Okay, currency strength on the day. Still pretty quiet, 50 and 50. We got the pound weaker today. Lots of noise around that 8:30 news in the US. So we saw a jump up in the Swiss, it's fading. We saw the Japanese yen go from weakest to midpoint. Now it's back down again. Aussie, New Zealand, this is kind of encouraging. We're seeing some risk on. Like, look at the New Zealand and the Aussie starting to gain some strength. Like, that's a lot of crisscrossing going on around that 8:30, 9 o'clock window. So tons of noise in the last probably almost 3 hours of trading now. Since from 8 news, about 2.5 hours of trading. That's a lot of back and forth. Aussie, New Zealand getting a little bit stronger. Watching the Swiss dip is kind of encouraging. Aussie was strong, came down to the zero line again, and then that's just noise. Very noisy day in currency land. Dollar index. Look, if I can't get a trade to the upside, either back to 101 or a drift back into this larger inefficiency and a rejection around 102, I may not get the timing or confirmation that I want to take that trade. So if this is what happens, if the dollar continues to work back a little bit, I'm just going to wait for a trend line break and then look to resume selling on the dollar. I don't want to call the bottom here. There's still symmetry. There could still be pressure on the downside. But that would be a better trade, in my opinion, if we get more like oversold conditions. More oversold conditions on the dollar probably looks a little bit better. So I'm just going to stand aside. Like, doesn't look good to me on the dollar index. Oil, this is starting to shape up where I may still take a stab at this from the bullish side, right? But I've got to see this thing back down towards these April 7, April 8th lows. This might be April 9, actually. That was like the low in the market. So if we come back down to that level, perhaps I see that as an opportunity to, get long oil, at least for a very low risk, high reward trade. But I'll wait. I'll see if that chart alarm gets hit. Natural gas popping back up above the 200 moving average. I'm still long in this one through 2027. I think commodity wise, I think I'm going to be okay on that, hopefully. Gold, everyone's favorite. It's still sideways for the last 1, 2, 3, 4, 5, 6 days. It's interesting how this level is not breaking though. This 3260 level is not breaking, not yet, but clearly there's a little bit of intermediate support. I don't know what moving average that would be. I mean, that might be like a 9-period moving average. I got a 21 right here that is hopefully going to get hit, but to just see it go sideways for 6 days, I do wonder if there's some follow through. High, low, indecision. If we have some follow through, then we just measure out some symmetry. I'm sure there's traders out there that are wondering if this breaks. I'll zoom into a smaller time frame here. That if this breaks, I'm sure there's going to be some short-term traders that are looking to get long and resume this uptrend. So you want to zoom in on gold? That's fine. You can box it in, right? I mean, price is at the lows, at the highs. Keep an eye on it. Watch out for the traps, but if we break and go higher, well, that run back to the highs could make some sense. I wouldn't be super bullish on gold. I think that if we actually make a breakout, this is a good looking trade if you're fairly tight and precise with your stop management. I'd still like to see a dip further down just because I'm waiting for that 200 bar count, which we've got to be near 400 bars at this point. Let me check the last time this thing touched. So back here, I don't know if that actually hit. Nope. So it's way back here in October. So we're back here. So about 396 bars. Okay. I mean, that's a noticeable bar count. A lot of indecision, probably some consolidation, a bit overstretched. I'm still comfortable having gold in the portfolio. I haven't sold calls. I haven't taken profit. I'm still hanging in there. I think there's a good hedge on gold. If the indexes drop, gold looks good. If the trade war stuff continues to escalate, if there's no clarity, no win-win, gold continue to look pretty good with central banks around the world and kind of playing this like non-dollar positioning. Silver, I still like silver. I want to see if it can break these highs at $35. Bitcoin, pausing. Any pullback towards the 85 to 84 handle looks pretty good to add. If we get a swing trade here, I like this. Swing trade, look to see if we head back up. And it might be, pullback, and it might be some wave structure, but I think we can hopefully see sweep of these highs, nice swing to the upside, higher low to higher high would be a good play on Bitcoin. What's nice about this too is if this is a low to high, these fibs actually play out really cleanly. This is a 109 618 extension. So if we pull back to a 382 or 50 618 pullback, then I'd be looking for this target. So this would be looking to enter. This would be looking to exit up here. That's just a swing trade. Now, obviously, if price goes higher, hang into it, hang on to it. I think Bitcoin, from the bigger picture, the bigger swings can get up into the 120s, 130s this year. So levels in the 120s, 125s, full measure moves between 130 and 145. I mean, it's fairly flexible, but obviously making all-time highs again would be encouraging. MicroStrategy still hanging out 378. If we start to get higher, my trades should be looking better. So this bull call spread is up about 225 bucks. Potentially pays out closer to $1,100. 1150 is my 1170 is my max profit on this trade. Realistically, if I get this thing up to, I don't know. I mean, if I'm up 100%, I'm okay with that. If I'm up 150 to 200%, I'm probably going to take the profit early versus waiting to January. It's just a trade. It's a pretty cost-effective debit spread. So if Bitcoin is up, MicroStrategy cooperates. This trade looks a little bit better. Anything at $500 to $600 profit, I would think I'd just take it and move on. Coin hanging out about $200 right now. A lot of ratio spreads have closed out for profit. Copper. Holy crap. That is a big, nasty move on copper today. Wow. Weak demand for copper supply stress. Copper plunges on recent peaks. Copper's down 2%. And thankfully, this dump on copper didn't cost me anything. And I don't want to step in front of this. Like, this is a lot of volatility on copper. This could be if we're lucky, this could be a wedge where it's gonna kind of contain. We'll have higher lows and lower highs if we're lucky. But if we have a weaker demand, copper could be, the sign of, they call it Dr. Copper, like PhD in economics, self-proclaimed. But look, we're sitting here at all-time highs. I mean, if copper holds support, cool. If copper does not hold support, we could have all-time highs become a very ugly correction. So I don't know. We're right in the middle. I mean, that's a monster swing. That's like a 25% swing in copper in the last 30 days. So not fun for anybody. That's a 25% move. Yikes. So be careful. I wouldn't mind taking a stab at copper if we are coming back into these lows again, but that would be defined risk. Probably just a bull call spread and try to get a reward that's greater than risk and maybe take a stab at it. But if we break and go lower, okay, I'll take a small loss. I might hedge it. We'll see. Japanese yen turned off the highs. Just watch your currency pairs. Still haven't broken out fresh highs in the Japanese yen. Nikkei melting up higher. EWJ had a high yesterday that gave some back. I'm going to see if we can get higher than this. I'm going to move this one down. Fresh highs. DAX, little pause. I mean, I still like buying dips on this. I just can't believe we didn't get a dip. Like, it was just gaps, gaps, gaps. This is a V bottom looking trade. So, V bottom, the hardest thing about a V bottom is if you didn't catch it, which would have been right around that 200 moving average. If you didn't catch that V bottom, now you've been waiting for days to get a pullback, and we haven't had it. I mean, you could zoom in and you could, I guess, justify like this is your pullback, right? So we swing up, we pull back, maybe you buy that, right? We swing up, we pull back, maybe you buy that. Like, that's about as good as you're going to get right now on the smaller time frame. But I think on the daily chart, I'm just looking to see, where do we get a pullback? I don't see it yet. Possibly, this high, this low. If this melts up all the way to the highs again, I could see this range trade. I don't know. Depends on how crazy things get. But I'll be patient. I'm still long FEZ. That's working out fine. Nothing on the FTSE for me. Argentina still waiting. I'll see if this one chops around a little bit. Copper, we talked about. Here's Brazil. Brazil, come on now. Don't give it all back. We're just above the 200 moving average. ILF just above the moving average. I want to see if these can stay above the daily 200 period. MAGs gapped lower, but does have earnings today. Today, I believe, is Meta, Microsoft, and then Apple and Amazon are on Thursday. So if MAG7 can print 4 strong companies, 4 of the biggest companies in the world with positive earnings, that might be enough to drive this a little bit higher. Okay. If we can go back, here's a 50% pullback on MAGs. Here's a 61% pullback on MAGs. That might be enough to help, still drive this little melt up. So 50% pullback, 61% pullback. There's the 200 moving average. So I don't think MAGs are dead. Earnings should be relatively solid. This earnings report, this whole like week of earnings, nothing's really reflecting tariffs right now, not yet. So I think that's why the consensus has been okay. It's the guidance that is potentially putting, and nobody's really talking about it. Everyone's acknowledging that things are uncertain, but nobody's really spending a ton of time on it for earnings calls because it's so questionable, right? Apple at 209. Apple has earnings tomorrow. So Apple, Amazon tomorrow. We'll see what happens. Let me bring up, I've got another account here. Take a quick peek. Make sure I've got my puts in for Amazon. I think I put July puts on this one. So let me take a second. I'm just going to check my, I've got a Thinkorswim web platform to look at. There we go. And it is being slow. All right, while that's waiting, Broadcom back above the 200. Google popped on earnings, has faded a little bit. I still like Google holding above 150. We did have earnings; they were solid. They committed their 75 billion to capex. The lows might not be like the guarantee. This could also be setting up, and hopefully not, but could this be setting up a larger bearish pattern? Yeah, maybe. Right? Maybe we don't get back to highs. Maybe this is going to be a corrective move first before we see longer term positioning. So don't think these lows are guaranteed, especially MAG7. Like this rotation could be ugly and nasty, also necessary. Okay, I've got a June 20th put. All right, so I've got some protection on Amazon in case I need it. So if Amazon does disappoint, I've got 10 contracts running on a put that hopefully offer up some profit. It was a 28-cent debit. That so worst case is I'm up like $15,000 on Amazon. I'm sacrificing $280 max against that in order to hopefully protect my position. Meta, I'd like to see Meta still go lower, even though they have earnings this week. I mean, I don't know what earnings is going to be. This is today after market, so I'm going to start looking to see if it prices out the right way to see some volatility. A lot of earnings trades I will be taking for this week are both directions, just because what is happening is look at Snap for an example. Okay, Snap was actually up like 20+% off these lows. They actually had solid earnings on both sides, and it's down 15%. So I mean, these moves, like this is more than we typically see on a lot of earnings. So I think the price action is highly sensitive, which means I don't care if price goes up or down. I'm just trying to take something that's going to move. And if it moves beyond what's expected, great. That's easy money. So that's what I'm pricing out with a lot of these earnings plays. Microsoft is holding the lows pretty nicely. If we come back and revisit those lows, I'm going to put in some more income trades. So if we revisit the 360, 350 zone, I'm possibly going to allocate a little bit more and also put in some. I like the 111 strategy for this one, or a 1111, so I can define it. But I want to keep it out of the way. Netflix likely going to stall at some point, but I'm not going to call the high. I've been pretty lucky on Netflix. I was long. Put in some 111s when this thing dipped, got paid there, did a broke wing butterfly. I was debating like, should I take on another call trade? It just didn't offer good credit. I was getting like $1.50 credit for a risk of like $1,100. I'm like, that's a terrible trade, and I'm calling the top, so I'm not going to. So I didn't take this recent top trade, but I will wait. Nvidia put on the collar trade. This is a 130 by 80 collar for July 18. July 18 expiration, 130 by 80 collar. So this is 130. If price goes lower, then I'll look to see if that $80 collar or the $80 long put is going to help lower my cost basis. Tesla is still hanging out at 278. I can get it called away this week for 257.50, depending on MAG7. If MAG7 is up, I know we have to get through MAG7 today and tomorrow, and we have non-farm on Friday. I might just be safe and let it get called away and flip it. I'll be up like $6,500 on Tesla. It might be worth it just to not have the risk in case things come, crashing back down, because I also might take another chunk of shares in the May expiration, which is a 245. This one right here, out a couple of weeks now. This is going to be the 2nd on Friday, then the 9th and the 16th. If this 245 is assigned, I want to make sure that I don't want to have 200 shares of Tesla on 5 accounts. I don't want 1,000 shares of Tesla. I'm good with like 100 shares, flip it, flip it, flip it. If this is going to be a range trade on Tesla and I can income trade this thing, cool. I can get longer directionally with better confirmation. I can certainly take more income trades if things are dropping, waiting for trend line confirmation, but I'm just going to be taking shares, flipping it, repairing it, and hopefully coming out of this like with some profit to show for it, considering the stock's down, 55%, and I flipped this thing for, 20 plus $1,000. That's pretty good, right? So I'll take it. Berkshire, I want to sell it. I looked at some a call condor. I just didn't get the credit that I wanted, so I'm going to pass. Bonds were actually up on the short term. God damn it! I should have been freaking long on short term bonds, because that's what's happening. Like, we're seeing short term yields go down. We're seeing longer term yields go up. That's the steepening right now. But the short term bond market is actually improving. So IEF is flat, but SHY, that's the 1 to 3 year treasury bond, that's going up. If you look at like the, US 3-month yield, this thing's down. You look at the US 1 year yield, we're down, right? So short term bonds are going down. Therefore, or so say short term treasury yields going down, but bonds going up. So that's not a bad play. 3-month, 2 year also down. 2 years dropping a lot. So the 2 is going down. The 10 is sticky. If you go to the 2 and the 10, here's your comparison. We're still well above the 0 line. The 10 and the 3-month, we're at the 0 line. We haven't had this discussion in a while, but I think we hammered on this last year because we did come out of this inverted yield curve. We are out of the inverted yield curve on the 10 and the 2 year by a lot. And this is what has historically been a borrowed time indicator. It's not the inversion that causes the recession. It's not even the disinversion causes the recession. It's that change in rate. Okay, it's like typically, historically, I think 11 or 12 times in a row, every time this happened, it's like there's a recession. Within about 12 to 24 months, there's a recession. The argument now is like, yes, there could be a technical recession, but it won't be felt all at the same time. 2008 might not ever happen again. It's like we could see sectors and having some type of rolling recession. But I'm sure there's going to be some sectors that perform pretty well. I added trades in healthcare yesterday, so XLV added some trades in yesterday. I like that healthcare sector. I like energy as well. And it's not really oil. It's not really the reason I'm trading the energy sector. It's because it's negatively correlated to the S&P, and it is. If we're going to build for the future, it's like, let's have energy efficiency. Let's be more energy independent, and hopefully it's more along the lines of like solar, nuclear, wind. I mean, it could still be oil and natural gas, maybe. But anything to build out this whole AI infrastructure that's this big pipe dream right now. I mean, how sad would it be to have like the future that everyone's excited about without the ability to create it? Like, we don't have the energy to harness the computing power to run the data centers to have AI be anything that's going to help. And obviously, that's why some of the skeptical or skeptics are like, "Yeah, we'll never build it. It takes, computing power is beyond our capabilities." Well, I mean, hopefully we get there, I guess. But anyway, whatever. So the inverted yield curve to the disinversion, that's why I put here borrowed time. This has been a pretty common recession indicator. Once we come out of the inversion, that usually within about 12 to 24 months, we are facing a legitimate recession. Now, what do stocks do during recession? It's 50-50. Literally 50% of the time stocks go up during recessions and they go down. We've obviously had a nice correction, 20+% of the S&P, 27, 28% of Nasdaq. Dow was down, in the teens. Russell's down almost 30% at one point, peak to trough. So that doesn't necessarily mean recession, but it's like clearly the markets have taken notice of that. Okay, let me see here. I'm going to cancel this SPX trade. I'm seeing it running all morning. So I've got this broke wing butterfly that's trading for about 85 cents. I'm seeing this level lighting up. If this piece of crap gets back to 556, I'm going to be annoyed. I'm going to cancel this broken wing. Update. Okay. Where's the SPY at right now? SPY is 548. I still need this thing by, it was a tomorrow expiration. I need to get up to 556 for break even. That's still a tough task. So I probably did the right thing. I pulled the plug on a trade. I lost, it was a $2 debit. I closed it out for a 60-cent credit and just took a small loss. And then my hedge trade is also garbage today. Like, I mean, this is price action. We gap lower and we come back in to eat into the gap. So price really hasn't gone anywhere today. We are down on the day, but price action that we see is it's slightly higher than where we opened. So market's at least making a comeback. The whole day could be spent doing this. We don't break the highs, we don't break the lows. We just had this reaction, and then price just kind of hangs out here for the day. Why would that be a very viable play out for the day? Well, we have MAG7 earnings today and tomorrow. That's probably more important than a little news today, right? Why? Because they can keep the market chugging along. Am I trading gold today? No, I'm just watching it. I'm still in gold. I'm still watching gold. I want to see pullbacks on gold, but I'm not a short-term scalper trader on gold. I hold. It's portfolio allocation. I want to add a lot more to it on decent levels. If we break and go higher, it's a good diversifier. Okay, we did gold, we did silver. We were into some of the treasury stuff. I'll go currencies here in just a moment. I want to look at market breadth in China. So let's go back to this chart. So that's my intraday stuff. Let's go to China. Let's put a trend line here. It's kind of all I'm really watching on China is if that trend line still holds. My exposure is less than what it shows right here. I do have some shares of Baidu and Baba. I got out of KWeb for profit. I got out of FXI for most of my accounts of profit. I still have JD. So JD is still some exposure as well. I'd like to see if China can still make a, maybe a high, maybe some sideways, maybe a bull flag, and then go higher. Or we come back up and fill this gap, which is what price looks to be doing now. We maybe head back down for a higher low, but we hold support, support, support. But I have noticed here on China, like trading confirmation, although it's very aggressive, like trading confirmation can be way easier. See what I'm saying? Like we go down here, up, down, connect the highs. That was a great spot to buy, and price went immediately your direction. So what I tend to do is I try to buy extremely low. So like, buying this low or buying this low, it's like I'm not exactly spotting that low perfectly. Coming into the moving average cluster, like sure, it's hard to call the bottom every single time, but confirmation can help. So similar here, if we have a let's say a pullback and a pullback and a pullback, connect the dots, we get above that stop loss below, like we can go back to those highs. That could be a good trade on China. CQQQ, I'd wait on that one. Alibaba. So big dump on Alibaba, but back into the middle. I do have some shares and options. A lot of my options, as this thing dropped down to 99, I was selling like $75 and $70 puts. So this cluster down here is looking pretty good. So for Alibaba, let's go into Alibaba. So I have a lot of puts with a lot of time that's still in them. This is a bull put spread. I have some shares. I'm up, $4,500. Like it's fine. It's just a bunch of options. Most of them show some profit, which is good. So I'm going to take a look here. The June expirations, I'm probably getting a majority of the profit on. Let me go in here for Alibaba. So I have a June 20th credit spread and a September 111. So let me put in a BP here. Oops. So that's a bull put spread. That's a 111. So between the two of them, the 111, I mean, that's a big income trade there. That's almost $600, and I'm up about 63%. The bull put spread for June, I'm up 95%. I'm just going to go ahead and protect this profit. I mean, it's like, do I sit right now and wait? I'm in two contracts. Most I can make on this trade is $626. I'm up $595. I'm just going to take the profit. So I'm going to plug this in as another winner today. Alibaba, that's a 65 by 40. And it was 313, hopefully closing this down for, like 20 cents or so. Even better, 15 cents. Let's go. Give me some liquidity. I'm going to go just above the mid price Come on. There we go. 16 cents. It's not freaking bad at all. Cool. So let me go through and close these out. I've got a hard stop here in about 10 minutes. I'm going to try to get through some trades and close out and talk about some currencies. So this is my 111 for September. There's my bull put that I'm going to close out right now. So bull put, close the whole thing, 16 cents, filled. Easy peasy. Alibaba on this one. Bull put spread looks pretty good. So that one closed. This one, 65 by 40. This one's only for 250, but still up about 95%. I'm just going to take it. It's in 2 contracts. Closing 16 cents. So close there. This one closed out. I'll keep the 111 trading. This one 308 up 295 bucks. I'm going to close this one down. Filled. Closed. Okay, no shares on BABA here. No here. This one should have it. Okay, so closing this one. There we go. So not bad, 568 bucks. I will take that across the board. Alibaba, no exposure here. No exposure here. No exposure here. And this one has the wide spread with some shares. Shares are up. Bought it at 100 bucks. Not too bad there. I still want to ride Alibaba out a little bit longer. So I think I will. Group positions, close. Close this down for about 95%. Come on, 16 cents. Let's go. There we go. Filled. So now, quick trade, quick check Alibaba. Closed out my bull put spreads. Still have the 111s for September that are up about 62%. You know, not bad. I mean, my max at 580, 585, 591. Super low strike prices. I mean, I don't know. It's close, but I think if I get up to like 75%, I mean, these are so low. We're trading at 118. I mean, this is way out of the money. So if I go to September just based on the options calculation, this is a, 4 delta. So the probability of that actually hitting and getting assigned, it's very, very slim. Even if it did get assigned, I'd still be okay owning it. I guess my biggest risk on that one would be that they delist, but that's a risk I'm willing to take. Baidu, still have some covered calls in the shares that I own. This one is a collar trade. Let me check on this really quickly. And then we'll talk currencies, and I've got to go in about 7 minutes. What a interesting day. Okay. Baidu. Have some shares. They are covered at 95. So this is a bull put. This is a bull put. And this is a covered call. There. So have some shares. I've only covered 100 of those shares. 95 out to May. This one's probably going to be, it's right now it's up 56%. I'm just going to let this one expire. If it gets called away, I make money on the trade. I'm low 80s break even. And then this trade isn't too bad. I'm up 52%. Trying to think by June 20th. I don't know. It's a low profit percentage, but it's just less risk overall. It's not a bad chunk of profit just to take. Let me kick this one around. So let me go maybe a Baidu. Close spreads. I'm just going to put a question mark here. So I might jump in and manage those trades into closing. I mean, I'm up $200 and another $92, so about $300 on the trade. Max profit would be 650, so just under 50%. But I also don't necessarily want an assignment on more shares of Baidu if something were to happen where the price is going to drop. If I own more shares in the 80s, it's like I think this stock would freaking hold up. But we've been as low as 75. I don't know. I think I can hold it and repair it. I just hope the damage is kind of done. So I'll kick that one around. All right. I'm going to wrap things up here in 4 minutes. Let me power through these currencies. Let's go Aussie CAD. I still like long, looking for any pullback here. So low, high, look for a 50% pullback and then see if we get back to around 91.50. Aussie Swiss, not a lot, but noise right now. I'm still looking to see if I can spot a bottoming pattern. So keep an eye on that one. Aussie yen, I keep saying this. If you're watching yen crosses, there might be some good upside potential. Just trade what you see. Go to the smaller time frame. I'm still long Aussie New Zealand. I just didn't get filled on my level at 106. So I'm just going to wait. I'm going to see if this will settle into a bottom. So here, maybe settle into a low and then come back up towards, I'd like to get this thing back to 114 if possible. VWAP, yeah, for futures, day trading futures, yes, I think is important. Aussie dollar, I'm waiting for some type of dip. I don't think I'm going to buy much unless it was if it's a break and a pullback, then maybe a buy there with confirmation because this would be all open space. But I'm just watching the dollar index. CAD Swiss, hopefully looking a little bit better. Still willing to average into the bottoms. Still looking for a bottoming formation. Don't have it yet. CAD Yen, I think this one is a low risk, high reward. It's going to be noisy at the bottoms, but if it's a entry, there's profit. The risk is relatively manageable. So I don't think it's a terrible trade, especially if you have some risk on. But I definitely want to use the stop loss. Swiss yen, no trade. Euro Aussie, probably selling off a little bit. Yeah, I don't know if I'm getting to the pullback. I was hoping to get like a 50618 swing here. So high, low, lower, high, lower, low. If we don't get that trade and this just slides lower, that's a tough trade. I'm not going to chase it. I'm not selling lows. EuroCAD, working out. If anybody sold this at equal highs or resistance, I was talking about this structure breaking. This one's looking pretty good. If you're short EuroCAD, I like this trade down to this level. So around 5,400 be a good target. Relatively safe. Euro Swiss, Euro's dropping. I'm still willing to add into the lows. I'm still watching for bottoming formation. Euro pound giving back a lot of the noise we saw through that rip on the dollar where the euro benefited. Euro pound is still pulling back. I mean, honestly, if we pull all the way back into this support level or these lows, I'll just buy more euro pound and just trade this nasty range. Euro yen, no trade. Euro New Zealand, similar to Euro Aussie. I mean, this might just continue to slide lower. I'm not chasing it, selling a bottom. Euro dollar. This is the pullback I've been talking about. If you are short euro dollar, I would still be willing to short this thing at the highs too. Don't just short this and say, well, my stop loss is right there. That's way too tight. Even a stop loss here is way too tight. I would go like an ATR above the highs and say that's a stop loss, but be willing to take small trade, and see if this pulls back to any of these pullback levels. 236, 30, 382, 50, anything in there for profit if you want to get started on euro dollar. Pound Aussie, I'm going to wait. Pound CAD, I was hoping we'd come up to hit resistance. No trade on it yet. Pound Swiss, I'm still looking to go up. This could actually offer up a good pullback. So if we pull back into this area here, maybe a high or low for that swing back into 113 or so. Area 1, area 2. If I traded Pound Swiss in this chunk, I think there's a good chance we go back into this pocket. So not a bad trade. I don't think Pound Swiss is a bad trade at all. Just make sure you check your margin. Pound yen, no trade. Pound New Zealand. It did offer up I don't think this is done yet though. High, low, maybe a 50618 could still be tested, but they're volatile. I'm just being so careful right now. Pound dollar, maybe on the shorter time frame starting to confirm a sell-off. I think euro dollar is actually a little bit cleaner right now. New Zealand CAD still waiting for a 50618 pullback on this swing. So somewhere in here, and looking for a swing up. I like that trade. New Zealand Swiss, actively looking to see where I can spot a bottom. New Zealand yen, similar to Aussie yen, if it's going to offer up some more upside, the defined risk would be scaling in through these bottoms, stopping out maybe one ATR below those lows. New Zealand dollar, I'd wait for a pullback. Dollar CAD, still choppy around this area. It might just keep leaking lower. I'm not sure. I'm staying out of this one for now. I'm interested in buying down here, or I'd have to see a break, retest, fail, and then more downside. I'm not just going to say that's the trade. It's just a terrible position right now. Dollar Swiss, waiting for a bottom. I think we pull back to like 87.50 to 8800. Dollar yen, I think there's a good opportunity for this one to be the low as well. This low, if you're long dollar yen, area 1, give it a chance to see if it spikes the lows but don't get faked out. Stop area maybe 1 ATR below that, and then room to chew back into like the 146, 147, 148 area to the upside. And the answer to that is no. Elias is asking, do I have a range of what I want to make per day? No, I never do that. I've been trading for 25 years, and it's never been about how much money I'm trying to make. It is about making good trades, and the money ends up just showing up. Like I've made the most money by just placing good trades, and I think you put so much pressure on yourself when you're squeezing out trades, you're forcing trades. Not my style. So I give myself the entire year to grind. And like right now, it's like I'm up for a lot of accounts that if I wanted to invoice, clients this year, it's like I could, and I would invoice them at the halfway point, see how that looks, and then maybe invoice them again at the end of the year. Or I could just sit and wait and hopefully hit a high watermark. But I think I've earned a little bit of a profit this year when I've grinded through these markets and I'm up double digits, and the market's still down double digits. So anyway, but I've never set the goal of like, I have to make this today. I hate that. It's my least favorite thing to do. I think that's so much pressure. It reminds me of like day one Forex trading when I'm trying to scalp, 10, 20 pips a day. It's very, very difficult to set those goals and force those trades when sometimes you just don't have to trade. That's the hardest thing, is having discipline and patience. So anyway, there's my quick answer. All right, I got to go. Thanks everybody. We'll see you tomorrow. Bye.
Thanks for watching today's A1 Trading Show. Be sure to subscribe and to turn on notifications so you don't miss the next one. All month long, you can get the Edge Finder 40% off, our best discount of the year. Check out the links in the description below to visit the Edge Finder homepage, or speak with a team member directly to get the 40% off discount now. Trade safely, and we'll see you tomorrow.